We've all been there, short on cash in an emergency, maybe from medical bills, a broken car, late on rent. Good thing most banks offer short-term, low-interest, and quick turnaround loans, right? Well, that's always the hope anyway. But what if you live somewhere where there are no banks to turn to? Fact is, this is the reality that 3/4 of the world's poor live in today. I'm Forkast's Justin Solomon, and this is the Great Disruption. While the banking system has been working fine for those in first world countries, this hasn't been the case in other developing nations. In fact, over 1.7 billion adults worldwide have no access to the banking services that many of us take for granted, meaning there's no way they can transfer money, take out a loan, or start a savings account. In other words, no way to get money to family or friends or vice versa, no way to borrow for their future, and no way to build wealth. And these people usually live in extremely poor and remote regions where professional opportunities are limited in the first place. Lack of banking is also a problem for an estimated 160 million small businesses worldwide. So there's no way they can take out a business loan or access other financial services that would help them and their communities grow. Many poorer regions around the world simply lack banking infrastructure, and the issue is that there's no incentive to develop the financial infrastructure in these economically disadvantaged regions. So what's the solution? Blockchain, the underlying technology behind cryptocurrencies like Bitcoin and Ethereum, can help create more financial inclusion and democratize access to banking services. How? Well, with blockchain, no one needs banks. Blockchain-based payment systems do not require the extensive infrastructure of traditional banking services. You don't need any physical infrastructure at all. A laptop or smartphone with an internet connection would be enough to give the unbanked access to financial services. And the best part? There's no need for the approval of a central authority. Blockchain is known as a permissionless technology, meaning that anyone can freely use these networks. Here's how this works. It's an alternative new financial system known as decentralized finance, or DeFi. DeFi aims to create an alternative for centralized financial institutions by offering decentralized financial services. These financial services are publicly available for everyone without the need for a credit card or know your customer verification. You can be your own bank or engage directly with others who can bank you. Decentralized financial services are controlled by smart contracts living on the blockchain network. This enables peer-to-peer financial services without the considerable entry barriers of the banking system. These services include crypto lending, loans, and savings accounts. But instead of borrowing from a bank, users borrow from other users who are lending their crypto to earn interest. And since there are no middlemen, users typically pay around 1% interest rate instead of the average 9% on a typical personal loan. DeFi still has a lot of potentials, but in reality, the unbanked are not being served here. Not yet. But when it comes to saving on remittance fees, this is where micropayments are flourishing. Blockchain enables near instant and cheaper transfers than the banking system, as there are no intermediaries facilitating these transactions. For instance, blockchains like Cosmos or Solana, some of the more popular used crypto networks, offer transactions with near seconds finality for a very low transaction fee. In contrast, the SWIFT network that all traditional banks use can take up to a week to finalize a payment and can cost up to 20% in remittance fees for cross-border transactions. But the future is still out of reach for a lot of people. DeFi has its own challenges to overcome. For now, it remains a highly technical field that is hard to navigate for crypto beginners. That's changing though. As DeFi grows, more user-friendly DeFi protocols are popping up, enabling more and more people to use it easily. Through blockchain, emerging economies could leapfrog from a lack of financial infrastructure to participating just like everyone else, and be able to grow wealth for themselves and their families.